Bankruptcies start now. 2009 again. Silver to jump high. With news of Jo-Ann Fabrics filing for bankruptcy, I can't believe that. That's like an 80-year-old business. Jo-Ann Fabrics, gone. EV manufacturer Fisk are also heading for bankruptcy. What we're really seeing, what is actually happening is BlackRock, Vanguard, and State Street are about to combine forces for an enormous takeover like we've never seen. Let's start. Corporate defaults are happening everywhere. We see that. Dollar Tree is no longer claiming to be a dollar store. They'll now be shifting their business to plan to sell items hovering around $4 to $7. They want to be like a low-end Target, a low-end Walmart. This is life in inflationary times. This is why I stack silver and why I know many of us stack silver. This is the weakening dollar. This is what we're seeing. Life in inflation that is sticks and is persistent. In 2020 and 2021, corporate bonds were bought up by institutional investors, and these are not bonds purchased by you, not bonds purchased by regular people, you and I. These are institutional investors. Everything's maturing now this year. And if companies cannot pay back these institutional investors, then bondholders will reclaim the company's assets and cash flows. If interest rates remain high, which is the way it looks, then institutional investors take over these assets. That is going to be a massive shift to life as we know it. Just think of the enormous impact this will have on commercial real estate. All of those bonds mature in this coming year. Just wrap your head around that. From what we've seen with the struggle coming out of the pandemic, with this commercial real estate, this hybrid work where there's empty office spaces everywhere, those bonds are coming to maturity. Now, these changes, they'll hit us in all directions. That's the reality. And we're already being hit with pressures of inflation and a weakening dollar. This article by Breck Dumas says that automakers tracking drivers, sharing data with car insurance companies. It says, report reveals sneaky way car companies share customers' driving habits, leading to some drivers seeing rise in insurance rates. This is really bizarre. It says, automakers are collecting driving data from customers and quietly providing it to insurance companies. And the practice has resulted in some unassuming drivers seeing their coverage increase or even terminated due to this practice. This is according to a new report. The New York Times reported this week that car manufacturers like General Motors and Ford are tracking drivers' behavior through internet-connected vehicles and sharing it with data brokers like LexisNexis and Verisk, which they create consumer disclosure reports on individuals that insurance companies can access these reports now. And the consumer reports do not show where drivers traveled, but they do provide information on length of trips and driving behavior. This article says driving behavior like hard braking, driving behavior like hard accelerating, speeding. It sounds like me going to work. Insurance companies can use those reports to assess the risk of a current or potential customer and adjust rates or refuse coverage based on these findings. This feels like just one more way that we struggle to get by month to month, right? This is like another, car ownership is already in 2024. Owning a car is not the equity that we used to think it was, right? People used to believe, and some still do believe, that their vehicle offers them equity, like the equity we hope to gain through home ownership. That's another discussion. But this is right here. This is the only real equity I feel I have. I'm a homeowner, and I'll tell you, my mortgage is enormous. This silver that I have and the gold that I've stacked through the years, this is the only real equity that I know. It's in my hand. This is why I still stack silver, and this is the real wealth that I have. Everything else is just debt. The debt, the mortgage on my home is an enormous debt. That is nothing like the equity that we all believe home ownership is supposed to give us. And a vehicle is really just it feels like it could be equity, but it's truly not. This is an article posted just recently by CBT, and it says negative equity sets new record in previous quarter's used vehicle market. Negative equity as a new record. It says negative equity in the used vehicle market grew in the final months of 2023, underscoring normalizing trends in the pre-owned segment. It says Edmunds noted high levels of trade-ins worth less than the outstanding balance of the owner's car loan in its fourth quarter used vehicle report. Roughly 20% of new vehicles sales involved a trade-in that had negative equity during the October through December period, the highest level seen since 2021. So if anyone has tried to sell or trade in a car in the past decade, this is real. I mean, this is the conversation that you end up having, the equity in your car. And it sounds like you need some kind of advanced math degree to figure out how these dealers are calculating the equity. But you're losing. And we're all losing on cars. It really, truly, it really sounds, this is again another conversation, but it really sounds like leasing is the smartest way to go. This article says negative equity values also rose to all-time highs. It says Edmunds notes that the average outstanding balance on an upside-down auto loan was $6,000 during the period, a record-breaking number and an increase of roughly 46% since late 2021, an increase in 46%. Now, this is just another way that the dollar is showing its weakness and inflation is showing its persistence, as all of this comes down on us, on regular people that's in our silver stacking community, regular people that choose to identify this issue in our economy and swap our fiat currency out for silver. I'm still bullish on silver, absolutely. And I know it's around $25 an ounce today. This is 1 ounce of silver, $25 for an ounce. It's going to go up, clearly. As all of this comes, when these bonds mature this year and also in 2025, silver is just going to be pushed up because we're going to feel it in the dollar. We're going to feel it in everything that we see going on in our day-to-day life. And stacking metals, I'm not a financial advisor. I'm just a regular guy. I'm just telling my opinion. Stacking metals, that is the true way to go. Home ownership, it's all debt. Mortgages, it's all debt. And here we see with these articles, the cost of car ownership, it's just an example of how the dollar weakening and everything going up as inflation stays, and this delusion that we hold regarding equity. Here, this is an article from Go Banking Rates. It says more than 40% of Americans have car payments, and here's how much they're paying. This is 40%, right? This is how much they're paying. It says anyone in the market for a vehicle in the last few years can attest how difficult it is to make a purchase or to get into a new set of wheels without waiting a few months. With supply chain issues causing delays and inflation bringing up the cost of cars and interest rate hikes leading to higher monthly payments on auto financing, it's all going to be painful for the buyer. It says more than 40% of Americans have car payments. According to a recent survey, over 1,000 Americans conducted by this Go Banking Rates company, it says 40% stated that they have a car monthly payment. Of those who admitted to have the car payments, 46% said that they were spending between $300 to $500 a month. That is a lot. $300 to $500 a month. That's like what many people are spending. This quick search I saw, this is on CNBC. This shows the average cost of full car insurance went up 26% in 2024. The average cost of a full car insurance payment went up 26% in 2024. And this article, actually, I'm not going to go through all of it. It tells you the states with the biggest increase, right? Topping the list is Missouri. Your cost went up 40%. New Jersey, 45%. Rhode Island, 42%. Colorado, 36%. Nevada, 27%. This is all increases that we feel as this inflation sticks and the dollar continues to be weak and weak. And I am still going for silver. I'm bullish on silver. I'm holding these bars in my hand. This is a 5-ounce bar. This is a 10-ounce bar. and a 1 ounce. I'm just giving you a little sample. 25 today's spot around $25 an ounce.